Hi, this is James Sugg with Westpac London's end of day report for Wednesday, November the 2nd. We saw risk appetite creep back into markets a little bit today, despite ongoing significant concerns about what's happening in Europe. As I'm speaking now, Greek Prime Minister Papandreou is speaking to Merkel and Sarkozy of Germany and France in Cannes, and others as well are involved in these discussions. I think what they're saying to him is have the referendum as soon as possible and get a yes vote. And maybe Papandreou thinks he can get a yes vote if he can persuade the Greek people that the alternative to the austerity measures and financial support from the rest of Europe is even more austerity and no support from the rest of Europe. So it's a tough job and a big gamble that he's taken, but maybe he thinks he can pull it off. That remains to be seen. We do know that the Greek cabinet have supported Papandreou in terms of his referendum call, so the confidence vote that's happening on Friday will probably be passed. That is, we won't see the government turfed out as soon as this week, and then it'll be a matter of getting a date for the referendum, which, as I say, Europeans need to see by, I think, no later, they've said, than December the 11th now. The other big story today is that we've had the Federal Reserve's statement. As I'm speaking to you, the Fed chairman, Ben Bernanke's conducting a press conference. They left policy as it was following the September meeting, i.e. they've continued with Operation Twist, buying longer term maturities in exchange for selling shorter ones. They're going to keep rates at near zero, at least until mid-2013. They also published revised forecasts. For the third time running now, they've actually revised down their medium-term outlook for the economy. Some of the numbers, for example, this year they've shaved their forecast from 2.7 to 2.9%, down to 1.6 to 1.7, and next year's a midpoint of 3.5% for 2012 GDP is now a midpoint of 2.7%. Unemployment right until the end of 2014 and beyond is forecast to remain above its long-term trend, and that's one of the reasons why they're committing or they've made that conditional commitment to keep policy at close to zero until mid-2013 and maintain that commitment today. Some of the things that Bernanke said, just running through, let's have a look. He said that most notably, recent European developments posed risks to the downside, to the outlook. He said that further purchases of mortgage-backed securities were a possible policy option, even though the Fed has a longer-term objective of just having treasuries in its portfolio. But certainly he said that they could consider further mortgage-backed purchases as a policy option if judged necessary by economic conditions as they emerge. He also, in response to a question about why are you always getting it wrong, why are you always revising down your forecasts, he said honestly, it's a fair question, and the drags on the recovery have been bigger than they thought, from problems in the financial sector, from problems in the housing sector, and so on. Certainly, so not a direct hint from him that we're about to get further policy stimulus, but certainly you could argue that his commentary certainly paves the way for possible further stimulus, depending on how the numbers on the economy turn out in the next few months. On that, we had private payrolls figure for October. It rose 110,000, down from an upwardly revised 116,000 September gain. That sort of outcome is still consistent with our view that we're going to see a 65,000 increase in total payrolls in the official numbers coming out this Friday for October. The other big event to watch for, as well as the G20 meeting, of course, which is going on over the next couple of days in Cannes, is the European Central Bank is meeting tomorrow, Thursday. We are in a very small minority expecting a rate cut from the ECB. I think only 6 out of 54 economists surveyed expect a cut. Some going, of those at 6 though, some expected a quarter like us, some expected the ECB could even do a full 0.5%. I'd be impressed if they did. Okay, so that's the main stories today. In terms of markets, it's well after the European close, just approaching 7 o'clock now in London. On equity markets, we've got the Dow currently up 1.2%. It's at 11,798. The FTSE closed up 1.2%, French market up 1.4%, and the German market up 2.25% today. In commodity markets, Copper prices up 2%, gold prices up 1.1%, $1,731 an ounce, and the oil price up about 0.25% at $92.45 a barrel. The Aussie dollar has been little change today. It's at 1.033 against the US dollar. We've got Aussie retail sales figures both for the month and the quarter, September and Q3. They're coming out today for a bit of a local focus. All right, more on the main international events, particularly the ECB. Did they cut interest rates or not? Well, I'll tell you tomorrow. Bye.